So good evening, ladies and gentlemen. My name is Jean Rognetta, and I'm very pleased and honored to welcome for this webinar Professor Julia Prats, who is a Vice Dean of IESE and chaired the Tech Capital Markets Advisory Board during the almost 2 years of work, which ended last week, and with the presentation of the report. Just two logistical things. First, this session will be recorded and its content published on our website. And secondly, if you want to put any question, you can just write it in the conversation. Professor Prats will reply at the end of the webinar. And I will be writing this, so all you have to do is really just to reply. And now the chair is to the chairwoman, Professor.
Thank you very much. Thank you very much, Jan. Yes, it's my pleasure to go through the main findings and recommendations that we presented last week in our meeting in Paris to present the report that has been done on, as we will see now, finding new ways of financing tech SMEs. So basically, I'm a professor of entrepreneurship here at IESE, and I work primarily on entrepreneurial process and also on things related to professional service firms. And as you can see here is my CV. I am an engineer by training, and then I did my MBA at IESE, and then a DBA, a doctoral in business administration from Harvard University. Basically, let's start right away with the session. And here we have more or less the planning for the session. So first, I would like to start explaining the project overview and how this project has been evolving until today with the release of the report. The project outcomes that are expected. We will finish this project around in a month. So everything that will be related to the project. Also the background to this report, the challenges that we have identified, main recommendations, and finally to talk about these main recommendations in depth, each one of them. Finally, I will be very happy to answer questions if there is any questions at the end. So as Jan said, please send the questions in the chat, and I'll be answering them at the end. So if we start with the project overview, this is a project, is a European project that has been put together by 3 partners, Europe Unlimited, and PME Finance, and IESE. And the overall objective that the project has is to enable, as I said, an increase in the supply of alternative finance for innovative SMEs, and in particular equity finance using different ways. So the first one would be improving the exit opportunities for shareholders in private innovative SMEs and mid-caps via marketplaces, increasing the use of capital markets to diversify and increase the supply of alternative finance to innovative SMEs or via venture capital funds, and exploring the opportunity for new funding models, and in particular those leveraging distributed ledger technology. So this is the project that we have been working, as Jen said, in around the last 2 years. So the project outcomes are not only the report that we are presenting here, but also several actions in order to spread the findings and the different ideas around this same topic. So there have been several webinars and also several workshops in different parts of Europe in order to disseminate the findings and the conclusions and the recommendations that we are bringing together in this project. So the report, that this is what brings us today here, first it describes the market conditions for innovative European SMEs and mid-caps in their ability to access European public markets. It also identifies, as I said, the challenges and impediments which may prevent them from doing so, and we provide some recommendations as to how these challenges may be addressed. So just a background on the TechCapMarkets report. It has been, as you can see, it was started in April 18 with an initial review of the literature, identifying the first challenges that we could find that had been already identified by previous literature, to start from building from what it has already been said on the topic. In July, we already put together a high-level advisory group, and we had a kickoff meeting just to discuss precisely the findings and the summary of all these reviews, the previous literature reviews that we pulled together. And we started to develop these initial challenges, just to get a sense of where the problems were. There was another meeting in September where we already defined the 9 challenges that you will see in a minute. And after that, we launched what is a field project, just trying to understand first if those challenges were equally important for the different stakeholders. And as you can imagine, for something like this, we have several stakeholders. We have investors, we have entrepreneurs, we have the capital markets, we also have intermediaries, agents, and so on and so forth. And we wanted to check through using interviews if the challenges that were identified by the high-level advisory group together with the previous literature, if these were real challenges, and also to which extent each of these challenges was prominent for each one of the agents or the different stakeholders. In May, we had May 19 last year, we had the presentation of these preliminary findings, and we started to work on the recommendations, and then we launched a broader online survey also to different stakeholders, again to put together what you will see in the report on trying to figure out the challenges, the final challenges, the difficulties for each one of the challenges, and then some recommendations for solving the different challenges. We validate that through focus groups in July, and in September we started the work on the final report that we presented last week, and we are now presenting here. So these are the 9 challenges that we identified and that we checked, as I said, with these different constituencies, first through the interviews, second with the survey, and finally with the focus groups. And I will go one by one, being not I would say briefly, but at least to get a sense of what we are talking about when we talk about challenges. So the first challenge is the fragmentation of the European market. And what we mean by that is precisely the fact that from 2006 to 2018, European venture capital-backed companies that went public did so on over 15 different stock exchanges. So this is in contrast with what happened in the US, where, as you well know, there is one place for all of them. So I think this is a fact, and it presents a challenge and probably opportunities, but clearly that was a challenge that everybody identified as a characteristic of our market. A second challenge is the European retail investors typically do not invest via capital markets. In this case, just to put in contrast with what happened in the US households allocate 1/3 of their incomes to equity compared to just 10% in Germany, for instance. And if we go to other markets, it could also even be less. So we have a relatively strong retail market for listed SMEs in France, getting better in Italy, but we still have many other countries that are behind. So the second challenge is having this lack of retail investors investing in capital markets. The third challenge is the IPO challenge. In general, is that is at most acute in smaller tech companies. I think that doesn't come as a surprise, but definitely the performance and the demands that the capital markets puts on SMEs makes for the smaller ones something complicated to manage. Empirical evidence suggests that this size has a positive impact on tech company performance IPO. But as you can see, this is not for the small ones. So basically, again, one challenge for the smaller ones that are also, they also need this type of financing. We have a fourth challenge related to junior markets. And in this case is that in general, junior markets are not tailored to the specifications of innovative SMEs. And in this case, there is an increasing number of these dedicated exchanges, clearly, and that these include SME growth market and other SME dedicated trading venues, such IAMS in LSE, or Externet in Euronext, FirstNoc in Nasdaq, MAP in the Madrid Stock Exchange, or New Connect in Borso. So definitely there is all these different markets that are characterized by more relaxing or more relaxed listing requirements and lower cost. And well, in fact, trying to be tailored to the needs of these small SMEs. However, it's still, companies still find these that they are not at the level that they would like to. Number 5 challenge would be the lack of liquidity for listed tech SMEs. And I think this is a very clear challenge, and as we will see, is one of the challenges that requires, where we will recommend something very specific for that. So there is insufficient liquidity that can wait on issuers or on investors and on the market intermediaries. So we find that investors are reluctant to invest in SMEs if they don't have the right information, as we will see later, and that evolves towards a lack of this liquidity that we are seeing here, lack of liquidity that we are mentioning. Number 6 challenge would be the cost of listing on the public market outweighs the benefits. We all know that there are many different costs related to going public, including direct costs such as the underwriter, external auditors, legal and financial reporting, etc. And we know that these underwriting fees can range from 3.5 to 7% on the money raised. The underpricing is also something that affects that, and all this is, it also affects the listing. So all this, if you add up all these things, this is an impediment for tech SMEs and mid-caps to list in public markets. However, we will see later that this is not something that companies put as a priority or as important for not listing, but definitely is actually a challenge. The challenge number 7 is the lack of secondary trading opportunities for privately held shares in innovative SMEs. And I think that unless business angels or crowdfunder shares are acquired by larger investors, such as venture capital funds, or the company has an exit, there are no obvious ways for smaller investors to generate liquidity. And due to the relative youth of crowdfunding and other specificities, relatively few exits have taken place. This is not the case in the US. When we look at Nasdaq, they offer liquidity for early employees, for founders and seed investors with equity in young companies. And as you can see here, transactions on Nasdaq private markets reached 1.6 billion in 2015. So we have launched several initiatives in Europe, but they have, not all of them have prospered in the way that it was expected. So challenge number 8 is the lack of connection between private markets and public market investors. And again, this is a clear challenge that again we'll address on our recommendations. And it is a challenge for public market investors to invest in tech SME and mid-caps. Specialist tech public funds are often small in Europe, and even large asset management firms and institutional investors, which have an alternative investment programs, including allocations to venture capital funds, do not invest in tech SMEs via European stock markets. This is a fact. The majority of crossover funds, which invest in both public and private companies, do not pursue a specific technology strategy. Of the 10 most active crossover tech investors, only one is located in the European Union. So we see these facts add up to our challenge number 8 that says that there is this lack of connection between private market and private and public markets. Finally, the last challenge is the lack of equity. There is a lack of equity research coverage for listed tech SMEs, and as you can see, that challenge has to do with challenge number 5 directly, and also challenge number 7 in some way. So they are very related. So SMEs tend to be underserved as regards to research coverage. The provision of research, both pre and post IPO, has been a market challenge. Although the paid for research market is evolving, we still don't see enough companies covering this, and then it makes very difficult for the SMEs to get known and get attracted, to get attraction for funds. So these are the 9 challenges that we have identified. And now I'm going to pass very quickly to the main recommendations. So out of these 9 challenges, the report proposes 5 recommendations that has to do with the different challenges. So the first recommendation goes to the European Investment Bank Group. We would ask them to support the development of crossover investment funds or companies. This recommendation has had, I would say, good agreement from the different constituencies as something that really can help. In fact, during the conference was also a recommendation that was supported by many of the people in the conference as something that could really help. As you can see, the challenges that this recommendation is addressing is 3 of the challenges: the IPO challenge for small companies, the lack of secondary trading, and the lack of liquidity. It is also, well, we need to acknowledge that that this is something that is not new, because there is already some crossover funds that are functioning, but there is not enough to start with. And let me maybe explain what a crossover fund is. This is, as we can read here, this intervention would take the form of an IEF or IB selecting the fund manager's board advisor and investing on a pari passu basis alongside national promotional banks and private sector institutional investors. The fund managers will be responsible for proposing the appropriate fund structure or investment vehicle. So basically, that's how something like this would look like. And here you have some recommendations that I'm not going to go through on what the companies could do with that, and also what these investment vehicles should have. Basically, 3 recommendations that should be a long-term in nature and possibly evergreen or perpetual. Blend the skill of public market investors with the core tech growth market skills of private market tech investors, and be of sufficient size to support companies to achieve an optimal size and scale ahead of listing. So that would be this transition that would bring companies to a more mature stage, and hence listing in a much better condition, and having then the possibility of having better coverage, better liquidity, and at the same time being able to carry out all the costs and everything that is related to being listed. The second recommendation is that European exchanges should permit companies to issue dual-class shares upon listing on European exchanges. And in this case, we are addressing the challenge of improve the competitive of our European exchanges and overall benefits of becoming a public company. So in some way, we are trying to make it easier and better, lowering the barriers specifically from entrepreneurs that don't want to lose the control, and that would be one way. We know that this solution is already in place in some places, and sometimes is not being used. So it doesn't mean that it's the solution, but at least is opening the door for whoever wants to do it. So this is what we are proposing, is having this availability of these dual class structures, because that may, that may help some entrepreneurs to go unlist. We also know that at the same time may reduce the potential pool of investors. But we believe that even there is some pros and cons, we believe that there is more benefits than problems in doing that, basically because entrepreneurs and investors can choose to use it or not to use it. The third recommendation would be the development of a European SME block trade platform to match buyers and sellers. And in this case, we are addressing the challenge of the lack of liquidity. In this case, we have already some examples of existing European block trade services. As on 2019, we can find Eurex in Frankfurt, the Borsa Italiana, that belongs to the London Stock Exchange, and Euronext. To address the lack of liquidity for listed tech SMEs, we recommend developing a pan-European SME block trade platform to match buyers and sellers. This would take the form of a closed platform on which brokers can post block trade requirements, particularly in tech SMEs and possibly all SMEs, without disclosing the final counterparties. There would be no requirement to post bid-sell offers, and the actual trade would be executed via existing marketplaces. The SME block trade platform would need to be developed by a consortium of exchange operators, potentially facilitated initially by an independent body such as, for instance, the European Commission. So I think that this is also a very clear recommendation. The number fourth recommendation would go to governments, and we would recommend to actively encourage research on tech SMEs. This is something that, as we have seen, is critical in order to get liquidity and to get really the market going. The lack of this quality equity analyst coverage for listed SMEs in general is a long-standing challenge, which may have been exacerbated by the unbundling rules in MiFID II. Tech companies should be encouraged and supported to produce quality research. Support at the European level could take the form of a recommendation to crossover funds or to funds to ensure research on their portfolio companies at the member state level. This could take the form of corporate tax reliefs or some other mechanisms. Companies eligible for support would be SMEs as defined in MiFID II. That is our recommendation. Some examples of current providers of paid research, you have here a good list: Edison Group in the UK, or Sidoti Company in the US, ASF Equity Research, Impetus Equity Research, and so on and so forth. You can see all of them: All Invest, Invest Securities, Diamond Equity, Alpha Value, Harman, and so on and so forth. Basically, this is also an important recommendation that got a lot of echo from the participants, and also from entrepreneurs that really believe that helps them to get a market that has at least the minimum liquidity for their investors, and they are willing to also to pay for it. So that's also important hearing from the entrepreneurs. The final recommendation goes also for governments should consider incentives for retail investors to participate in IPOs and primary issuances. And here we are again trying to address the the lack of liquidity for listed SMEs. So as you can see, many of the recommendations are trying to approach the main issue of liquidity and being more effective in these markets. Basically, attracting retail investors is important, although the challenge is far from homogeneous across European countries and EU member states because of different legal frameworks, because different tax frameworks, and so on and so forth. Certain countries, for example, Sweden, have well-developed retail markets for listed tech companies, although this is usually a function of the wider capital markets and the tech ecosystem. Tax incentives, investor education, and a minimum allocation to retail investors at IPO would all be considered. In fact, part of this project has been starting with this education to entrepreneurs and investors about these possibilities, and trying to encourage the necessary information for retail investors to jump in this type of markets. There are several best practices. We put here as an example the UK Enterprise Investment Scheme, but there are others that also have been working on that. In this case, they designed to encourage the investment in small or medium-sized companies by offering tax reliefs to individual investors who buy new shares in qualifying companies. So that could be one example. There are others, and probably we need more of them in order to get these markets moving. So I think that at this point, I finished with the explanation of all the recommendations, and we have still some time for questions if there are any questions.
Thank you very much, Julia. I see some people are already going away the moment you stopped speaking, but to those that are left, any questions? This is the right moment to put them. I would take my question will be, which of the propositions do you think will come in place first, Julia? My bet would be on the block trade platform.
Okay, so that was you mean the one that is going to be put in place, or easy?
Which one is most likely to be put in place first? What do you think?
So yeah, well, the one that you mentioned is true, the development of a block trade platform, because there is already something in place that it's easy to I would say to promote. But I would say that it's important to think about the first one, right? The crossover funds, because first I think it's something that it's well known in the US, and they use it, and you realize the benefits of doing that. So if we need to lobby in public policy for some of these recommendations, I think this one is an important one. Okay, here I see here a question. How can we get a copy of the presentation and the report? Everything is online. It's going to be in our website, in the Capital Tech Market website. So yeah, definitely you can get the presentation. You also can get the complete report to download. And also, I think there is the webinars are also in the website. About the different topics that we have been developing, specifically from several capital markets, also specialists on the capital markets on different topics.
And I think that was the only question, but it's
fantastic.
Yeah. Well, thank you very much. Thank you, Julia, for being so precise and concise and clear, I must say. Thank you for everybody for coming along. And our next webinar is on Wednesday the 4th at 6, and it's on various companies' strategy for valuation, for defending their value and creating value. Thank you very much to everybody, and goodbye.
Thank you very much. Goodbye.